Hello and welcome everyone. This is John Person reporting for PA Stock Alerts. It is Friday afternoon after the markets have closed. Of course, it's May 11th. We'll be in Las Vegas next week and we will still be conducting business as usual, PA Stock Alerts. Our current position is we're long still the SDS. There's no change in our stops. We're just going to keep that going. All we did this week was we identified that the market was, at an impasse here, and we took the money off the table on the QID. So it was a nice little trade there. As far as looking at any buying opportunities, I don't personally view this downdraft as being complete or finished right now. So that's why we're hanging with the SDS. But we could see one. And as you can tell here, we're looking at the E-mini S&Ps, which closed at 1350. Now, that is a futures contract, and this is the daily chart. But notice that all we did was stay within the weekly range. We closed actually right at 1350. I mean, if this was an option expiration day, they would call this pinning at a strike price because 1350 is a strike price. I mean, 1350, you can see it right here on your screen. It closed right on the dime. Now, next week, on Friday, is option expiration. So May is not a big month, but I think the condition of the market, it might be a big expiration because people were looking for the stock market to continue its rally. Instead, as you can see, we've been on a decline. Now, Tom and I have been on the bearish side of the market. As you know, that's why we're in these ETFs, and we still view that this potential shoulder, head, shoulders, and the neckline. As you can see here, clearly we have a neckline. We've broken the neckline to the downside, and we never recovered any. Now, let me take it, even though I've got my person's pivots up here, let me go over here to edit. I'm just going to get rid of this real quick. Sorry for that. All right. We were also at monthly pivot support, but we've closed now for consecutive daily bases. We've closed this day, we closed that day, and now this day. 3 days in a row we've closed under the daily support. Typically, that's not a good thing. In fact, this could be just like kind of a trend, a consolidation, and some might even want to consider this a descending triangle as these highs descend, and as you can tell, we have the lows about on average. Take this one and that one out of the picture, and that's about the average low. So we have a little descending triangle. Typically, when you get a breakdown, it follows the condition of the trend, and this is the trend down. So measuring technique would suggest that you'd measure from point A to point B and then extend that lower, and that would get us somewhere between 13, say 10, down to, 1290. I don't know if we'll see that immediately, but we will take it one trade at a time. The neckline that I was talking about is right here. So, I mean, if this is considered a shoulder and a right side or higher sloping head and shoulders top, with this being the shoulder, head, and shoulder, then this is the neckline right in here. We've broken and closed below it. So that is a good argument from a chart pattern perspective. The market really couldn't sustain any gains. It had all the ability to do so against these lows this week, and it never happened. So we're staying with the SDS position. So since we are in the SDS, let's look at the cash market, SPY, spiders. And the same type of situation developed. We have this major rejection off today's lows, and the market closed again underneath this pivot support, which is that blue line, so we could potentially see further weakness. Let's look to a weekly chart and see what kind of damage we show on a weekly basis. Weekly basis says we're in a weekly sell mode, so that says stay short. Today's close in the spider, the cash market, mind you, made a new monthly close. So not only do we have this doji here, and we formed a low close doji and then follow through the downside, but this particular week, which concluded today on the 11th, closed below 1, 2, 3. It just closed below all these lows. It's got a lower high, it's got lower lows, the close is below the open, and it's closing closer to the lows, and it's closed below the past or prior lows. To me, back to technical analysis school, that's bearish. So with that said, we're staying with the SDS. Now let's take a look at the NASDAQ. And I'm going to take a look at the NASDAQ futures. And the reason I like to look at the futures is because it trades all hours, right? And we get a little capturing the or European session, so to speak, of market movement. It gives us, since there is a lot of activity overseas, it gives us a better gauge of what the overall market looks like for that industry group or sector or index, as the case is here with the NASDAQ. So with the NASDAQ, we formed a weekly doji, meaning the market closed just about right where it opened. Typically, this is a sign that the market has stalled its descent. It's showing indecision, and that's why we just decided the way the technicals were looking for the NASDAQ just to get out of the QID, take the money and run, and if the market continues to move lower on the blue chips or in the S&Ps, we're going to let the SDS take over for us, and that's what we've done. As far as new buys, we have nothing on our radar screen right now. There's a few stocks, a few sectors that we'll look at, but probably they're a week or so away or middle of next week if they get a little bit cheaper. Today's news with JP Morgan having a little bit of an understatement there. Issue in their hedging department, losing $2 billion. Really didn't do well for the overall financial sector, including this company called Goldman Sachs. Take a look at Goldman Sachs just on a weekly basis. Goldman Sachs really taking a torrid decline. And if the overall stock market follows suit with Goldman Sachs, boy, that's going to bring us right back to where we started almost at the beginning of the year. You see what I'm showing you here? So let's take a look at the XLF as a measure as a sector group, the exchange traded fund, financial select sector. It doesn't look as ugly as Goldman Sachs, but it is showing pretty much the same type of pattern with the S&Ps. Now let's take a look at the NASDAQ trannies transportation sector. And if we take a look at a weekly chart in the transportation sector, it too looks a little sickly and closed below new weekly or past or prior lows. Is a new weekly lower closing low. Technically, that's fairly bearish. When we take a look at maybe the builder sector, because everyone was all looking at the builder sector, and quite frankly, I can't get on board with this trade at all. The home builder sector, they might have some retail sales comes out this week. This upcoming week we have retail sales, and we also have housing starts and permits. I just can't get on this particular bandwagon right now, not with the amount of homes and shadow inventory that we expect to come back on the market through a foreclosure processing. So a lot of the sectors that we look at, we can also look at the XRT, retail sector, and you look at this and to me it looks fairly toppy. Now if I dissect this and go top down, let me take a look at a couple stores. First off, let's look at one of our favorite. Tom and I had been in, if you were with us, made money with us in this one. This is Macy's. Looking at Macy's, low close doji, here's the doji, low close doji in Macy's. Macy's generates a weekly sell signal. So we look like there's a potential correction further in lower prices. They're coming for Macy's. Let's look at Nordstrom's. In Nordstrom's, same type of scenario. It looks a little bit uglier. It might have a chance to rally back to 53, $2 rally, the midpoint here, and then look for some more failure. You can look at Costco. I know it's not a department store, but it certainly counts as a major retailer. It has a topping action and is not looking good. So a lot of these stores, and we can take a look at maybe a J.C. Penney. Again, it's come off its highs significantly. We can look at a Kohl's. It's not really gone anywhere. I'm just going through the list here. We could take a look at our friend high-end Ralph Lauren. It had a pretty bad week as well. So consumer discretion, retailers, there's a lot of different transportation. There's a lot of sectors that we're looking at. We can look at one last one, the energy space. And if we take a look at the energy with the XLE, it's had a bit. I mean, look where we are. We're back to where we started. We're actually lower on the year. So there's a lot of sectors out there that are showing signs of weakening, and I don't see improvements. So as we catch up, I think with the overall indices, if they can catch up a little bit more, and we'll keep you posted this week as to any buying opportunities, that's probably towards the end of the week. We need to see the overall index completely collapse or have follow through the downside. Right now, I've just shown you some of these sectors, and if you're at least a a beginning student of technical analysis, lower lows, lower highs, closes below open, closes below past or prior lows is not a bullish sign. So we're going to wait, and we're going to look for more positive signs before we start dipping and catching falling knives in certain stocks. That's all I have. I hope you had a great week. We're just trying to practice what we preach. They say dump your losers and let the winners ride. And right now, that's what we're trying to do. We saw a stall in the tech space. We got out. We took money off the table. We see further weakness in the blue chips. And guess what? We're still holding that position via the SDS. Thank you all very much, and we look forward to seeing you next week. Thank you.